Hello traders, looking at AMD. So chip stocks were really happy, and then today 27th everything is falling. The reason is the virus. That's what the media would have us believe, but if I'm looking at the chart, dips will happen, and the reason why they happen I don't care. What I care about is if I can look at the levels and say, okay, that makes sense, and this makes total sense. So first, the fundamentals for those traders that are into it for the long term. But before I forget, at the end, they'll be subscribed to this YouTube channel. It's free. It'll pop up at the left hand side, I think. Click it and also choose the flag that makes you get the emails when I post new videos, so you know they're there. Back to AMD. Wall Street believes that Lisa Su, the CEO, is a genius and the greatest turnaround artist of our time. They did make the turn, at least the perception is, and now they're a legitimate competitor to all of the major, mainly Intel and Nvidia. So the stock is a champ. In fact, for 2 years straight, it's the best stock in the S&P. Even in 2018, when the market closed red and at the lows, AMD closed up 50% for that year. So that was impressive. More impressive is that usually stocks don't repeat. When they're a champion 1 year, they do not become a champion the next year. In this case, back to back. So if I were to bet on a chip stock, guess what? AMD would be the one. I don't care about the fundamentals. The stock is performing better than all the others. If the others are up, it will be up. The only way it's not is if Lisa Su leaves. That will clobber the stock, because perception is that she is a genius. And if you take a genius out of the equation, the stock will suffer. Until then, let's look at the levels. All right, so fundamentally, it's expensive, but they're all expensive except Intel. But there's a reason for that. Intel has a lot of problems. There's management issues. They're trying to set that straight. So from that perspective, AMD is not a buy. But today's dip, it makes sense. If I look on the chart, $48 was the last level of consolidation, albeit not that long, but it's this year. It's consolidated and it's sprung. It had a mini rally from this base. So I expect it to come back and test the neckline from which it broke out. Normal. Why it came back down, don't care. Zika or not, or whatever, coronavirus or not, it would have had to do it. Stocks just don't rally. Every rally has to check back to a level where the bulls shake out enough few new weak hands out in order to build a better base so they can break into newer highs. That's how it happens. And the reason why that happens in the news, it doesn't really matter. So on this bounce, I don't buy it going into 50.1, 50.2. Based on the price action on the short term, these are all short-term comments here. When it gets there, it should hit resistance. So yes, it's bouncing off the low, but it's going to go into some resistance. So it reports earnings on Tuesday afternoon with Apple. What happens on Wednesday morning is a coin flip. Your guess is as good as mine, as good as any expert. It's as good as the CEO of the company. She knows what she's going to say. She has no clue how the stock market is going to react. You would be just as good a guess on the stock market on Wednesday morning when they open after the earnings for AMD. So if you're trading, if somebody's betting on the earnings, it's a crapshoot. If I'm betting for the long term, I will use either buy the stock long term or use at least March calls or call spreads, or sell puts to buy it lower. If you don't know what that is, don't do it. Ask questions. So in this case, there are levels that I need to know. I know that under normal circumstances, earnings aside, if it runs into 50.2, it's going to hit resistance. Is it a wall? No, but it's I don't start there. I want to see them go above it and come back down a little bit lower. I'll zoom in on that. But before I do, I want to highlight the fact that losing today's low is a problem, and I'm going to put an alert, because if they lose that level, they are probably going to go to 45. There will be some sort of bounce somewhere around 46.4, but 45 is in play. If not 42 and 39, not in a straight shot. There are several levels in between. But this will start a negative reaction. And if the market happens to be down as well, and if the earnings reaction is bad, if they say something weird about something, they might have some sort of a sell event on it. Doesn't change the long-term outlook. This is just shorter-term price action. Okay, I'm going to zoom in. Whoops. I'm going to zoom in a little bit and see if we get smarter with the levels. Okay, I went from 2-hour charts to 30-minute charts. And now you can see why I expect some sort of a selling pressure as it recovers levels. If I look left, I said 50.2, right? It was an eyeball level. Look left on the chart. I'm going to show you a few candles that really matter. This is one of them right here on the 17th. It was indecisive, and this is exactly the middle of it. This is important on a few days earlier, the 16th, one day earlier. This was a sharp failure level, but doesn't mean that they didn't go above it. Actually, they did. When they came back to it, they tried to hold it. Look at that. The Friday close was that? The Friday close was exactly at that level. And then gap. And now they're trying to climb back into it. When they get back to a level that was a ledge, this was a ledge. Somebody fell off a ledge. When they get back to the top, they're not going to bust through it like butter. The earnings might make them do that. But under normal circumstances, I expect resistance here and at 51 and at 51.5. Every ledge is a resistance level. And if they lose, in fact, I'm going to put an alarm here. And if they lose, first of all, 48.8, 48.7, let's call it, is important because this is the point of control. This is where most of the buying and selling happened for the last month and a half or two. So mathematically, this is where all the buying has happened, most of the buying. So if it falls through it, it's going to be support. That's why, it's like hitting the brakes, and it's a soft net. It's not a hard line in the sand. So if they lose it, then it's considerably, something I have to pay attention to. But really losing the low of today, I didn't put it exactly there, but it doesn't really matter because to me, I'm not trading second to second. It's not like I'm trading futures contract off of it. I want to see where it's going. And if it loses this level, I want to start looking at it because it might have a dip lower. So again, I am agnostic to which way it goes, really. I was short Nvidia, but I'm not because I won on that short. It was a little tough, but I held my ground a little bit and it played out. So I don't have any interest in swaying anybody one way or another on AMD. It is the champ chip stock. So if I were to bet on a chip stock, it would be it. But markets have had 1% down day, since October. Friday was almost 1. So it's not panic. We're not even 2% below the all-time high. So this is the all-time high, I believe, for AMD. So, 6% off the all-time high is not a disaster. But it looks like a disaster. So patience and study the levels, and not every level lines up for everybody. So some people are longer term investors. They really only care about this. Now, this is a weekly chart. So technically one can argue that the breakout that I noted here more than delivered, but those who like ABC patterns, I don't know if this qualifies, but all I see is a burst, consolidation zone, and then another burst equal to the one beginning. So this, by definition, is a target of this breakout. So a check back to 36 is totally normal on the weekly levels. There are levels in between. 45 sticks out again here. 40.5, let's call it 40. And, 36, 35. Ideally, you want to stay above 36, 37. Just so you don't lose this candle right there on December. It's normal. So even if it falls all the way down to here, and I mean all the way, it sounds like all the way, it's 20%. It's still normal on the weekly chart. That's my opinion. I don't think we can get more information from the monthly chart. Okay, so the monthly chart shows us how levels play out. Look how long, this was the dot-com bubble. No, 2006. And then it fell out of bed. It took them a long time to get back to it. Okay, so this is definitely, that was definitely a ledge, and they just zipped right through it. So you know what? I'm going to mark it. I'm going to mark it. I'm going to call it monthly chart. So I want to see it, come back to it whenever it does. Oop, I may have marked it in the wrong place. Anyway, I'll fix it later. So the problem with slicing through levels is that it becomes frothy and in weak hands. So the slightest hiccup will cause a bigger drop than a rally that has had better footing. So this is a fantastic rally, but I would be cautious. I wouldn't panic out. If I knew the levels, I wouldn't panic out. So if it falls to 45, I wouldn't panic out if I'm a long-term investor. Even down to 41 or 40 or 36, I wouldn't panic out because I'm a long-term investor if that's the case. Meanwhile, it's easy to see why it's vulnerable. But then the earnings, you never know. It's a crapshoot on the earnings. Wednesday morning, it's a coin flip. So this dip is good. Then it shakes out a few short-term frothy hands, leaves a little bit of room for upside, and not looking for perfection. So people are now looking for a disaster. And then when the report comes out, it's like, hey, you know what? This is halfway decent. It's a relief. So they buy or they don't sell. So if they don't sell, then there'd be more buyers than sellers, and then relief pops happen. All right, Nick signing out.